going over the daily routine I have, what news sources I look at to gauge market sentiment, what asset classes I'll be going through on a day-to-day basis, and also we have a longer term view, what drives markets in terms of trend from commodity assets and stocks and also forex. And don't worry about the websites I'll be sharing, all the links will be included in the description box of this video. So every day I start my day off with Reuters. What I do is I go in the market section and I read through the most five or six most important news headlines they have usually posted on the main page. So all of these around here, and sometimes there's some more eye-catchy or something very particularly happened, I will follow up. But usually a 10 to 15 minute read, depending how fast reader you are, will give you a bit of a gauge. The second website I use on a daily basis is Bloomberg. Now Bloomberg articles are not free, unfortunately. They used to be free, now I believe they charge $15 or $20 a day, some in that range. Again, the market section, read the most important news that is usually headlined around here. They also have a section where you can get a bit more specific in terms of just currencies, and I have a read on those articles as well. If there's any particular video shared where market is all in unison on a particular subject, I will read that too. Moving on, I have a look at my Forex calendar for the day. I use Forex Factory. There's numerous different ones where you can use them from, but I use Forex Factory. Usually when I'm in the middle of the week, I have a good idea because I already did my weekly recap of my trading plan the week ahead. So usually I'm just positioned to get my timing right in terms of entering trades. The other website I use because I actively trade pounds is poundsterlinglive.com. Their website is incredibly good in terms of tracking what pound is affected by. Some of the articles are mostly populated by sell-side analysts, but there's some buy-side analysis in there as well. So get a bit of flavor of both. And they don't post a lot of articles, so usually I read them in the morning too. I have these basic things going on. And also, before I start my trading day, I'll have a look at what the inflation expectation does. So that chart, I'll be sharing that link as well in the description box. Usually it will give me a gauge what the last session was in terms of inflation and in terms of growth. That will give me a feel for if there's a continuation carrying on, particularly in conjunction with the stories I've read. So at that point, I've spent about a good half an hour, sometimes up to 40-45 minutes, really just gathering intel. What happened in the ASIN session, what was the thinking yesterday, what drove markets the day before, and what is the market anticipating for the rest of the day. So at this point I have a fair idea what happened, and I also have a slight insight on what else could happen. So once I have these chart setups, what I always look at, because usually when I start it, my day is around the London session, I'll have a look at all my yen pairs, particularly the AUD JPY, which is a great barometer for risk. Change that poly to candlesticks on the hourly, and let me get rid of all these lines for a second, and that will give me a good idea what AUD JPY did over the ASIN session. Was it risk on, was it risk off? I always like to see what did between 1 and 2 o'clock happen, because that's usually when China opens as well. So it'll give me a good grasp of where risk is. Is risk firmly on, or is it like the last few days was probably a little bit more contested, where at the start of the week it was extremely bullish. So we had China starting bullish and a carryover from London. New York session carried over bullish as well. So that's one chart, and all the other yen pairs I have a quick look at as well. The other thing I look at every morning is the Japanese 10-year yield. That is another way of gauging risk, what happened in the last sessions. So usually a bullish move will tell me, okay, risk was firmly on. We had quite a bullish narrative in the ASIN session. Sometimes there might be a carryover from the US session going into Japan. That will record quite positive bullish moves as well. But again, I want these all to play together. So I don't want my AUD JPY surging 300-400 pips, these yields dropping aggressively, and on the news feed there's nothing explaining why any of these are happening. That's when you know you want to stay away from the market. But if everything is in line, everything is has got a reason behind it, why everything is bullish, that will give you much more control over the rest of the day. So first thing we check is a yen pair. Second thing we check is Japanese yields. The third thing I check is the US 10-year yields and in what environment they're trading. Again, usually with US yields, a bullish move constitutes risk on environment, and strong or sharp sell-offs will usually needs to be in conjunction with some sort of a news. If there's no real news behind these sell-offs, that usually means you are in a dip buying mode where you think, okay, risk is still on. These were just short bouts of profit taking. Alright, so we checked Forex, yen pairs, we've checked Japanese yields, we checked US yields. We also checked inflation gauge that updates every night. And then we start carrying over to the usually pairs I like to trade. So GBP USD I like to have a look at. Usually by then I have a good idea what's driving GBP USD. GBP USD is quite a strong currency pair in terms of understanding what market is doing during the London session. There's the prime time. Going on to the New York session, you have several other assets that you can look at. But in the early London session, your key pair that is sort of holding control over the entire risk sentiment in the forex market tends to be GBP USD, and you get the most volatility out of it. The Euro USD volatility is very low. Daily ranges are recently under 60 pips, and that doesn't really tell you a lot. With GBP USD, you get some more stronger moves, and usually when these moves happen, the entire market will move with it as well. So again, usually nearly half an hour to an hour in the morning, I go through all of these to give me an understanding where things are. And there's a relationship that you need to develop between understanding news and translating that into what happens on the charts. It doesn't happen overnight, so you need to spend several weeks doing these sort of morning recaps. So reading the news that I've outlined here, looking what happens in the market, finding the reasons back with a news calendar until you can construct a view of what the market is. There's two reasons why you need to do that. One, you need to create that sort of routine and discipline so you are in tune with the market. The second thing is you will be doing is once you do read news every single day, you will also understand what is moving markets and by how much. For instance, if there's a positive political news coming out and GBP USD is only moving 20 pips, then you think, okay, we're in an environment where GBP is not really moving so much on political factors, but maybe some data is coming out and GBP USD is down 80 pips on the day. You know your drivers are right now economic and not political effects. And again, you will construct a narrative that you will then carry on developing as the year develops, because themes come and go in the market, but the dynamics and the way market moves never changes. It is always the same, just the headlines and the news changes, and you will create that sort of like relationship between news and how it prints on the charts as long as you stick to those recaps. So that's a really basic thing how to start the day. What I like to do in this video as well, give you a quick rundown on how to understand what is the trending driver of a particular currency or the market, because there's always bigger themes playing out in the market and you want to stick to those. You don't want to counter trend trade if it's not needed. Before I do that, I'm going to show you a couple of the trade calls or trade directional views I had over the past 6 months. One of them was Euro NZD. That was one of the key pairs I traded back in May and tried to continue build onto short positions. Back then I was at 178, now it's trading nearly 167, I believe. Euro NZD is 67, so about 1,000 pips lower after a very short time span of about 6 months. Really the key driver behind all of this was the reflation trade coming on, the carry trade coming back into gear, and euro getting used as a funding currency. It basically means that investors are borrowing euro because of the very low interest rates it has, and they will buy riskier assets in hope they will make more money out of the interest they need to pay. which is an environment where market is risk on, is very well doable. So when you know we're in a reflationary environment, you read on the news headlines that the outlook is good, usually you find that reflation trades will come back into the market, and currencies with a very low interest rate tends to get sold to buy assets or other currencies that have a higher interest rate. So here in your bigger narrative, interest rates and central bank divergence plays a huge role, specifically recently where you saw Euro NZD drop a better part of 1,000 pips. Another thing that I had looked at was AUD/JPY and CAD/JPY. Last year it was around November, so not too long ago, where CAD/JPY was kind of consolidating in that range, and for a lot of people it was very difficult to figure out where it's headed. Again, we had a good understanding of where risk is headed, what was the bigger thinking, and sometimes, most of the times I would like to say, these larger consolidations are foreseeable which side they will break out. So back then it was trading at 79, I believe now it's trading above 80, the CAD/JPY pair. CAD/JPY now trading 83, so again about 400 pips higher. Same thing with the AUD/JPY, they were both heading higher. So you can make these directional predictions fairly easily once you understand what is the bigger market driver. And then when you engage on a day-to-day basis, what you'll try to do is you'll try to navigate market effectively so you can trade based on what those bigger trends are doing in the market. What we are currently expecting is specifically a Euro AUD or any other currencies that are used as a carry trade. What we're expecting is that these trends to continue. So you're looking to sell your low yielding currencies, and what you would like to do is you buy your higher yielding currencies with a higher interest rate and basically ride out the trend. So we have this trend going on in Euro AUD. Let me actually take you down to the weekly, just a quick rundown what happened in the past. So around 2012-13, Euro AUD bottomed as there was about 3-4 years the aftermath of the great financial crisis, so the GFC. That's when the reflation trade, when the carry trade properly started, and it took about a better part of, again, 3-4 years and about 8,000 pips to find the bottom. And that is not really far-fetched to expect about the same from Euro AUD as we go forward. The reflation trade is going on. We know that the key driver behind this is central banks. They're holding rates lower for at least till 2022, 2023, and that will carry on, crashing pairs like Euro AUD or helping pairs like AUD/JPY, and in general all the pairs where one currency's interest rate is lower against another. We call that a carry trade, and these carry trades are very profitable for traders that hold them overnight, but they're also incredibly profitable when you start building shorts on when there's noise areas developing throughout the days, or there are deeper pullbacks and you know that the carry trade is still continuing. Now a couple of carry trades that are currently going on is in the EM space, so emerging currencies like USD TRY, so against the Turkish lira. We have here that the Turkish lira is appreciating aggressively against the dollar, mainly because US started to move away from raising rates. Obviously they had that shift in March, but then also Turkey started accumulating some more reserves. That means basically the carry trade is active with a 17% interest rate on the Turkish lira. That's a very attractive carry trade carrying on right now, and there's loads of others that are currently used as a carry trade. So another one of them is USD and Mexican peso. We're expecting these lows to continue grind lower over the years. Euro MXN as well. Now these are some of the pairs you don't tend to trade every day, but what they do is they will give you an understanding of what is driving markets. So Euro and the peso, I'm expecting this to come down as well as the month and the years progress. But a more dynamic pair like AUD/JPY, someday you tend to trade a little bit more often, and it's got tighter spreads as well. That will continue as this carry trade is carrying on. So Japanese investors will move money out of Japan with their low yielding currency and they will buy assets across the world, and they will also invest money into other currencies where the interest rates are higher. And in the near term to long term, this continues to go higher. Incoming the next couple of months, hopefully into the summer, I'm expecting 86 to be reached by then, and this whole narrative to continue. Again, in comparison to the last recession, we had a very, very similar scenario where ADJPY did not find a ceiling for another 3-4 years after that, which makes these long-term trades extremely profitable, and it will keep you on the right side of the market the majority of the time when you even day trade, which is incredibly important. So that covered a lot of the basics, what we look at on a day-to-day basis. Also covered what's market moving right now in the next few years as the central banks are standing down and not raising interest rates. So that's a lot to develop. That will not give you immediate profitable trades, but what we'll do is over the long run, over the next few months, it will set you apart the way you view markets and the way you engage with markets on a day-to-day basis. Thank you very much.